Good afternoon from the For the CME. This is Chris Robinson with your Traders Exclusive comment today, Wednesday the 6th, first week of September. Luckily, we survived the last week of August. If you've been following along with me for a bit here, you know, last week I was talking about the fact that their markets were under a lot of pressure, especially in the grains, corn, wheat, and beans. You had what people are trying to call a seasonal low in corn. Corn, after making highs in July around 417, corn fell to a low of 344 and a quarter. That's the lowest price we've seen in corn in about 2 years. A lot of that pricing pressure came because there were farmers out there who've do what's called deferred pricing, DP. August 31st was the last day of the month. A lot of those guys had to finally bite the bullet and make the sale on the physical corn. And them releasing that grain, some people like to think that that's a sign of a capitulation bottom. I don't know if that's true or not. I know that you can lose a lot of money trying to pick bottoms and pick tops. For now, however, it does look like that bottom area there is going to be some support for D's corn. So I watch that moving forward. Since that low, we've had a pretty good bounce. We've led up really by soybeans. Soybeans have rallied 45 cents. On good demand. China keeps buying our beans. Number two, obviously on the worries about the storms, both the Harvey and now the next one that's coming down the line. So that's driven up some speculation that prices may go higher for soybeans if we have a drop in yield due to any damage to the crop. So soybeans have led us up to the tune of about 45 cents. It's dragged up corn and wheat along with it. Wheat's rallied about 25 cents. Again, that's off a multi-year low. If you look at Kansas City wheat, that was at near a 10-year low. We've had a good bounce. And then as far as corn goes, we rallied about 15 cents. So the question is this a dead cat bounce? Nobody really know for about another 6 weeks. I'm saying to my guys, my producers, that if you did sell corn, wheat, or beans higher, again, we had a $1 break in soybeans, a $1.60 break in wheat, a 75-cent in corn. If you made those sales back in July, take a shot at re-owning them. You can re-own them on the cheap, buy a call option out for the next 6 months. If we do get a rally back, you've re-owned those bushels which you sold higher, so it can help out with your marketing at the end of the year. Our marketing plan really extends over 12, 14 months. So you get lots of times you'll get opportunities to re-own sold bushels moving down the line. So that's the number one thing I think that the markets have given us on this sharp sell-off. The dollar continues to grind near its lows. That should continue to give us positive support for our exports. We've seen really good demand for our soybeans and for corn. Mexico has bought a ton of corn from us in the past 10 to 12 days. They keep stepping in and buying it. Something to focus on when people start talking about NAFTA and the wall. Mexico's a big trading partner for us. They buy a lot of corn from us and also a lot of pork. So I would think that moving forward, I would watch that type of demand. We'll see if we can really get some legs under it. We may have to get the dollar to drop below 91, 92, really get down into the 80s, and that may really spur some more export activity. Every time there's been a wheat offer in the past 10 days, we've continued to lose out to the FSU, the former Soviet Union, and the Black Sea. Their wheat's still cheaper. They have a huge, huge crop, and they are willing to sell it. They've been hitting every bid. So the American farmer, if you're a wheat producer, you're still losing out to competition, to cheaper grain. That could change, though, if we did get the dollar to continue lower. Those are the things we're watching. If you're looking for help with your hedging or you're speculating, give me a call. Chris Robinson. Have a great day.